This is Justin AMZN on Thursday, July 25th, 2019. I'm back on the 5 minute. Took a little trip over on the 3 minute yesterday. But today, this is the move that I talked about coming back in between this triangle here. So I colored it orange just to help it stand out because I know there's a lot of lines in here. But pre-market this morning, we had well, yesterday we run into this, and then we, kind of pulled back into it and pushed up through. It looked like there's a little double top in here, a neckline retest, something real small like that. That's a horrible straight line. That's a little better. All right. And then we opened up right in here, right on this line, right where we pushed up into, it's coming down a little bit. And then from there, since it's hard enough to see, we just completely came back down. We just collapsed. Where did we retest to? Right back up to 1996 with an incredible hammer, inverted hammer right here. I mean, yeah, you could have just taken that candle bearish below and a stop above. And by the end of the day, it was flashing down here right into the lower end of the edge of the triangle here. Put in a low today of 1972.72. So that's 22 cents above the red line. And I'm pretty sure, and I haven't zoomed in enough to see, but I'm pretty sure we're right on the orange line right there. The open price, let's see, this is open high there is 2001.20 cents. Yeah, it's literally right on the orange line. So let's switch over to the daily. The orange line's not coming over here for some reason, but these two candles, this is 10 cents off of a tweezer top. I mean, it's a $2,000 stock, so this is a tweezer top. We had this bearish retest gap that was kind of creating an island reversal. We have a tweezer top here after a bearish engulfing. And we'll get to what's happening for earnings pretty soon. But it definitely opens the door for this being a little bit longer of a flag, more of a stair step than a flag coming off of this, but kind of moving a little bit more bearish. So we'll see what happens if we can come down to this X marks the spot by the 29th. That's, what is that, Monday? That might be Monday. I think it's Monday. Anyway, let's get back to how things move today. Not only did you have kind of the open right inside of the this triangle, but you had a high wave candle right on 1996, and it looked like it was starting to bounce. If somebody was getting in bullish above that, I mean, maybe you had a trigger in by a few cents. Hopefully you didn't do that. Let's see. Yeah, 6 cents higher in this candle. So hopefully you waited for a close above. It didn't go there. You wait for a close below, and you got in this direction going bearish. Or after it went, you're looking for a retracement back up closer to the bullish candle, and you got it over here. But the edge today was more bearish with this setup, and all day long, it just kept making these lower highs. Oops, let's draw it instead. These lower highs like this, and these relative lows here. And those relative lows were coming from the same pivot that we got into yesterday. So if I extend this back over here, or you can just look at where the cursor's at, we were right back into where we were doing that S curve yesterday. I had said I got in somewhere around here. We've pretty much stayed above that point, or at that point, above the rest of yesterday, and then today that's where we held until the very last 5 minute candle of today. So this this descending triangle, there are some places to play this right out the gate. This high wave candle, potentially buying here, not a very good risk to reward depending on where your stop is. If you're just trading that candle and it's kind of going counter trend or counter short-term trend, you're just getting an R as it moves back up here, especially this being earnings week. And then once this candle comes in, I can show you what happens on the puts, excuse me, on the puts here. And then it wasn't as clear where to go bearish in this area. This is a little bit more choppy. But if you were still in from this candle to here, you made a little bit more than you got out for here. But what I love about this is what I talked about. You know, a candle that came back into this range. I didn't know if it was going to be another U-shaped candle. I didn't quite expect that it was going to collapse in the last 5 minutes like this. It seems like maybe someone knew some news early, because after hours it flashed up, and look where it ran up to, the high 2005, which is another line, comes right down to basically have a closing price on that candle right about 1925. It makes another triangle in here, and it's going to be easier for me to sketch it quickly probably. If it's going to cooperate. There we go. I was kind of seeing this forming until this. I mean, I'm kind of ignoring that, and I don't really know what that is. But then it started to make these candles to go up, almost gets up to 1972.50, and then comes back down. And so clear all this. This is kind of where we're sitting. And where are we again? We're right on this line. These lines are working so well. This line, just to remind everyone, is coming from this downtrend. It was kind of this 5-minute candle, or I'm sorry, this triangle that I originally drew from the 5-minute up here, and didn't want it to be too tight on this, and so I kind of extended it. We had that open in here, and then we were holding that line as we kind of made this wedge sort of shape. We were dancing on it here. We retested into it, and then we were drawing in the 1996 price, and then this. Oops. Let's see, click there like that. This line has come into play down. I'll pivot here, and now we're just sitting on that. So we're below this triangle, this bigger orange triangle. We're below. Let me see if I can step back out to like 30 minutes. Okay, a lot easier to see that this triangle, and I've got some feature turned on that's drawing some triangles on its own. That it looks like those actually broke out and hit those ranges, which is pretty cool. Now we're down here, or potentially down here. We'll see kind of where things go in the morning. This was kind of where we ran up to way back in June, mid-June, a little more than a month ago on the 21st. We were at this level. We've come right back about to that point. So really, this is a bigger kind of S-curve. If people are looking at this as the S-curve and to continue, it's not what it's showing us to do right now. We're getting kind of a secondary pullback in here from like this initial one. And then we're pretty much at this point, if we open at this price, we are right on a pivot point that we contended with here. So I would like it to see 1925 again. During the open hours, when the market's open tomorrow, rather than just after hours. And if we can get a bounce going, I think it's a great place for it to bounce. We've got this line here, and then so if we have Friday the 25th, or I'm sorry, Friday the 26th, and then Monday the 29th, if we can pull down to 1925 and then bounce off of it, that would be phenomenal right here. But it is looking like we're going to get below the 21 tomorrow, and at least open below it. And then we'll see if we can get back above it, see if this fades. It is a retest, bearish retest gap. It can totally move bullish. I mean, it could move bullish all day tomorrow with people buying it up, and then potentially roll over at the 21. Or it's been such a bullish move. This could be an opportunity to buy here where people are missing it. This is a retest of this area. Really there's been a lot of 1925 interactions going back a ways. So that was where we initially ran up to with the inverted hammer. So I'm fine with this coming back here. I mean, it'd be healthy for it to pull back a little bit more to 1925. If we can get any more of a pullback, just look for reversal on a little bigger time frame. If you're playing down in the 5-minute or 3-minute, just be really careful with calling something a reversal or a bounce. You'll want to see that start there, and then for it to continue onto a 15 or 30 or an hour time frame. And for that to continue in that direction. Otherwise, it could just be a bit of a bullish flag on its bearish way down. That's kind of an idea of what I'm looking for. Initially bullish, potentially rolling over. It would be totally fine if it got back into this triangle range and then rolled over. It'd be fine if it somehow ran up, paused in the rest of this triangle, and then from there catapulted higher. And I think that would pick up the rest of the market. And I think we would see all-time highs next week if we had that kind of move. Right now, it's not quite looking like that since we're breaking down from this triangle. If we zoom back in now to a 5 minute, let's come back into a 5, and we'll zoom in on just this. We'll get real tight on just the day here. I don't want that one. There we go. Okay. We just take a look at this. Let's look at the call here. So buying this candle, this was at 925. That was getting into a call at 925 right here. And that would have been probably getting in, could have bought the high, 450 as the next candle's opening, maybe 460. And then the low here is above 4. So possibly getting in like 475 by like 375, $100 risk. But it doesn't move too far. You'd be able to get from 475, it doesn't even make it up $1. So you'd be exiting for maybe half an hour, 3/4 an hour on that, the rally from here up to the pivot that it rolled over at, the 1996, and this started this triangle, which just connecting these 2 points, all it did was show you that there's something holding this down here, and it wasn't the 21. Then if we look at the bears, if we look at the puts, because it's more of a bearish move, we look at right at the open, and then this candle at 1010. So I'm sorry, this was the 2100 call again. Looking for just a similar setup that to what happened yesterday, and would have kind of given you a second chance to get in the low $4 range, or 450 potentially. If you did 450 by 4 or 450 by 350, if you did 450 by 350, you got out for an R at 550, hopefully here. If you're able to do 450 by 4, I don't know if the spread was worth doing that with. Usually it's not. But if you did that with 2 contracts, you could have gotten out for 2R probably, or close to it at 550. But that was really the only time that it worked to pull into a value like that. I'm looking for a round number on something like this, so $4 or 450. $5 was too long to wait. If I did the trade I did yesterday, getting it at 5, I would have just been probably exiting at some point where I'm up a little bit, and hopefully I definitely wouldn't have kept it on too late into the day in case it did something like this, so it just completely collapsed. So, but more likely I would have been playing it. And I didn't play it, but more likely I would have been playing it bearish. So from the open, this is similar to how things opened yesterday, where it kind of spiked down with the option. Not as big of a spike here, but came really close to a whole number. It was the 2100 call yesterday was holding, I think, the low of 308 and then bounced from there. This one got to 502 and bounced. But this is one of those setups that you can just bracket trade this. Do above the high for your trigger and below the low for your stop. A little more conservatively would have been like 575 by 475, just for the purpose of this, talking around numbers. I'm going to say 6 by 5. Maybe on the second or third candle here, you're getting in at 6. Probably this one, you're getting in at 6, and a stop down at 5. And so getting at 6, looking for it to go up 2R would have been at 8. It would have gotten there here, and then would have given you the same opportunity again to buy down here. And this was open, getting in out the gate basically, or similarly to that area. I think that was a retest. Yeah, so this was this candle, getting on this candle because it's already moving down, and the idea is that it's going to stay bearish. And I mean, it's not that I was, I'm not saying trade it the way that I was spelling it out because I was right. I'm saying, if you're willing to risk an R for the setup that we planned yesterday, that's the way to do it. And knowing that you're going to lose an R if it just moves up a little bit more. but that's your decision to click the mouse to do that. So another opportunity here at 1010, 1005 and 1010 to get in 6x5 or even something tighter because the range in this candle was less than 50 bucks. So you had the potential to get in here as it's pulling back like 6x550. Let's say you did 6x5, that ran up to 9. You could have taken 2R at 8. The pivot that it pulled into was again the low in here and pushed basically the same level. This was basically relative low, and then this one was another relative low. But each time it did that here, it gave you a little bit more here, and then I guess about the same. Let's see, 912, 914. Okay, about the same here and here, but initially it gave you less. So even though it was about the same. So this was probably a quick flash and there wasn't anybody buying or selling the put to have this go up higher. So maybe that's part of why it's not showing a higher price for the put on this candle. But anyway, had you gotten in 6x5 and just held it and not gotten out here, you wouldn't have done much better because you would have been more nervous that it was going to just collapse and you're going to only get out for less than an R or an R. And then it, in the last 5 minute rallied right back up to the same price. So probably at 9 would have been a good exit at any point. But taking it in this range over this 2 hours would have been a whole lot less stressful to get in and out rather than just holding and letting this go sideways and just waiting for, okay, what's going to happen for earnings and getting more worked up about it or nervous about it. And so it's just whatever the mindset is you're going in with on the trade to say, okay, I'm going to let this play out. I'm seeing this pattern. I think I was seeing this. You can draw this in different ways. You can draw this to the bodies and you're at something like this. So you're connecting the bodies here and all the way down. And then it's like, oh no, it's breaking out. It's going. And I've lost a lot of money doing this where I'm thinking this is a breakout. Here's a retest. I'll get in. I'll look for it to go. And it doesn't go because my triangle is too tight, and if you just wait an extra half hour, or if you draw it a little more conservatively, then all of a sudden it's like, oh, look, there's a high. I don't even get into the highs. And then that happens. And so it's just letting it play out. You have the squeeze forming here. That was trying to push. And then really you could draw this a little differently here too. You could, oops, I think I'm get this over here. I'm going to zoom back out to redraw this. Let's do something like this. So, okay, I always like seeing the symmetric triangles. So this is more of a symmetric triangle here, picking up some kind of higher lows at this point, but I'm ignoring this altogether. Lower highs all day, higher low here, here's your breakdown, here's your retest to an apex, and here's your rollover. And so that's, it's a viable setup, especially when you have the squeeze forming. It kind of helps you make an adjustment. Like if I saw this squeeze forming as it's going down here, it's like, okay, this could fire bearish. Let's let it retest really nicely into 1990, start to roll over, secondary retest right into 1990. And we had some pretty close to tweezers here. Goes right back up to 1990, rolls over again, and pushes right down to the low of the day. Even taking this retest or this retest. So let's say 1115, 1120, or 1135, what was going on with the puts. So 1115, so we're right around 750. 750 right here. So let's say you were able to get filled at 750 and a stop down at 650, $100 risk. That moved up to not only 850, moved up to 9 just right here. You could have gotten in for you could have gotten out with an R or a little bit more just by recognizing that, hey, this is a breakdown here. I'm making a new low that I haven't made. I've got a lot of bearish candles in here. I'm going to let this break down because this is now 4 candles, 5 candles that are bearish in a row. It should retrace. It does. And you get in right at 750 and your stop is at 650, which is like right up here somewhere. and then it rolls over, and you're taking profit at the previous low on the stock, but the option, you already passed it. I mean, that would have been getting out at, let's see, here was 827. So you gotten in at 750 up to 827. That's only 77 bucks. So still doable, but probably hold on for an R on that, getting out at like 850 or something like that. So oops, back over to the 5 minute. So that's just some different perspectives on the candles of the day. And then obviously looking for this to roll over. This was the idea of the day, that it was the idea I had yesterday of the candle, the range that we could be in today. And like I said, I just didn't know it was going to take all day to the last, minute probably of the day to get down here. Oh my gosh. I'm seeing how close that is. I think that's spot on. That's probably the best line I've drawn on a previous day for where it goes the next day. That's just amazing. I mean, 1972, 72. It's right there. That's crazy. Okay, so that's working. And then the open one also. Look how close that one is. We're probably, the high is, we're probably about 20 some cents away from, maybe 30 cents away from this one. That was not as good. Only 30 cents off, Anyway, I think we went over just about everything. We'll see what else we can do here. Now, like I showed you, I drew a triangle tight on this. If we draw a little bigger triangle, and I know this is a very little data to work with, but what I'm picturing is slightly bigger triangle that we'll need to get away from. So it looks something like that. Something like that. Giving it a little more room. We'll see if it can get to something tight right around this line, right around this space, or get down to 1925 and then see what we do there. If we do a high wave candle on 1925, I'd say take it in the direction of that, where that breaks. I really want to see it bounce there. Does not have to. If it collapses there, you can play bearish. Just realize that we're still in a bullish trend on the daily, and you're going to be looking for opportunities to buy lower, and a lot of people will be. And there'll be some people buying early that are going to get, more risk on the table than they meant to, which means they'll have to sell out of their positions on its way down, which is going to cause more selling. And I'm totally fine with this coming into the 1800s again, into this level. And we can make some really large bearish candles, something like this one. I think the last time we had tweezer-ish tops was something like this over here. It's at a key level. I'd say, this is really a key level because of the triangle that's been forming out of it. And this was right around earnings too. We're not going to have this kind of gap up. It looks like if we do somehow gap up, look for it to be inside of that triangle, and then for it to take maybe another day to break out or break down. But I think there's enough people in this that it's going to move much more tomorrow. Maybe not right the open, but it'll get going in a direction, I think, in the morning. And will be some good opportunities. Now, watch out for the options. We're going to lose a ton of premium on any of the options that are way out of the money. The 2100 call is going to be worth like nothing, like maybe 2 cents, maybe. Anything closer is going to be really expensive, and then still just be dropping all that theta decay across the day. And so be really careful if you can. Scalp an R somewhere. If you're watching it and you're hoping, get out. Just take the profit and get out, because it's tough trading those options on the day that they're expiring normally, and then doing it on options where you have all the extra premium getting sucked out at the open or near, within the first portion of the open. Just be careful with that, and possibly set up some absolute zero that you're okay with the risk, because you're going to get slippage. You're going to have options move where you don't want them to against you. So if I look at like the 2000 call, whenever I put up the options, it always has this theoretical options price up here, and I always delete it because it's misleading. I'll say that though is you can already see where that purple line has gone from way up here to way down here. So it's already lost value way down here. It's following along with some of these spikes that are happening. Oops, like in here. So it's following along with it. It's tracking with that. But this is going to lose even more value, when it opens. And so just realize that that's going to happen, and don't have anything set up for just a market order. Do a limit order and be really conservative on the price you're looking to buy, because it's if you're too high, you're going to throw your whole risk at it before it does anything, and you could just be filled on some price as it's below it because of all the premium coming out of the options price. So all that to say, just trade cautiously, and we'll be back tomorrow to or sometime this weekend to have a video for tomorrow, and kind of see how things play out with earnings and see what opportunities show up. So yeah, just trade the chart, trade the candles that we're seeing, trade the chart. I hope this helps. This is Justin AMZN.